everybody. How are we all doing? Morning, Robert. Robert's the only one saying hello today, so he has the top fan badge. Morning, Robert. Well done. Sorry, it still feels really echoey in here. I've got rid of some furniture, and it's even echoier now. I really need to get something up on the walls. Morning, Marco. Marco is second. Excellent. Quick overview of news first. Today, basically, we've had the GDP come out for the pound this morning. Dead. -1. So that is the second month in negative numbers, which is recessionary. If we get one more, we are officially in recession. So the official definition of recession is a quarter with negative numbers, which obviously is bad for the pound. So we were forecasting to go up from where we were, obviously into positive territory. We didn't quite get there. We did go up. It was -0.3. We've gone to -0.1, but it's still negative. So it is a move in the right direction, but it's still the wrong way. So the pound this morning, obviously taking a bit more of a tumble. We have been tumbling quite nicely on the pound, but yeah, this morning selling off fairly hard. So there's potential for this one to drop quite significantly today. That isn't an expected number. So all the pound pairs basically likely to get an ADR hit on these today. So it's worth watching these for potential pullback opportunities today if you want to get into any shorts. I'm just trying to find my pen, which has disappeared again. So yeah, any kind of pullbacks you get, worth taking a shot at shorts on these. We've got pound New Zealand, obviously 125 ADR is last week's low, so that's achievable. Pound yen, there's tons of downside potential on this, but obviously yesterday's low, we did spike through this morning in the Asian session, but no reason why we shouldn't be getting down there. So all of these obviously short time frames. You've had your reversal alerts gone in this morning. And obviously this is where the news hit there. So that's your news basically. So flag break, drop, flag break. Yeah, so you could sell off quite hard today. It isn't the worst news in the world. It is better than previous. So if that was worse or the same as the previous, you'd get even bigger tumble on that. So we'll see where we go with that one. So I'm just going to quickly check something on another website. Just curious. This website that I've been working on with these colleagues, I just want to see what it's ranked that as. Calendar. Very bearish, correct. Good, does work. Interesting. Yeah, so basically this other website, what it does is it takes the news events and it gives it a proper ranking, basically. I'm just trying not to reveal too much information because I'll get told off. But basically, it's classed that as very bearish. I would say that is bearish, not very bearish, but we'll see. When you look at the previous statistics on it, we are above previous. So with this chart data that you get on this website gives you the previous, the forecast and the actual as a chart as well. So basically it's kind of like a little indicator, if you like, that you can say, right, the actual, so here, for example, the forecast was -0.1. The previous was high, so we were forecasting it to go down. If your actual is below that, i.e. if you get yellow, blue, green, that is very bearish, basically, because what we've got is a situation there where the previous was coming down, the forecast was to be lower, and the actual came out lower than the forecast. So we've got a negative forecast followed by an actual event that was worse than the forecast, which is massively bearish. So if you go back to that date which is the 12th of June, you'll probably find the pound had a pretty bad day that day. Yeah, so this is just about analysing historical data and forming trends from it. So it's really handy little system they've got in place on that. So I was just curious to how it came out. Morning, Jules. Morning, Virginia. Morning, Pleiades. You are a cluster of stars, I believe. No, you're not. You're a meteor shower, aren't you? I can't remember. Astronomy's not my strong point. Right, so today we've got the GDP, which has obviously come out negative. This afternoon, the only news we've got is the Canadian unemployment rate. That is forecast to go up, which is negative for the CAD. The unemployment change is forecast to be 0.9. So in theory, this afternoon, if we do get the numbers, we should see a negative move on the Canadian dollar as well. So just be aware of that. So yeah, lots of opportunities on these pound pairs potentially. So you just had a reverse alert there on the pound CAD after that weird move this morning. But yeah, so downward momentum for the pound potentially, but we'll see what happens. So the only ADRs you've had today are the Swiss yen. That really annoyed me this morning. We went straight up into ADR this morning, reverse alert at ADR, straight back down again. This undid all of that movement yesterday. So if you look at yesterday's lovely reversal alert we had on Wednesday, and then we put lovely new bearish market structure in. I was fully expecting a small pullback drop today. Thing screamed straight back up again, and that's the yen. So, yen really, really weak this morning again. I did look through the news this morning. There's your GDP for the pound. Trump set... hang on, I didn't miss this. I did look through the news this morning. I didn't see that Trump thing. Maybe it needed a refresh. But yeah, I was looking through the news this morning, of which there, as you can see, there wasn't really much. There was nothing really I could see on the yen that was particularly bad. So EU and Canada to get tariff letters today. Big moves potentially. Morning, Harold. I'll have a major statement to make on Russia on Monday. Interesting. 35% tariff on goods from Canada. So again, Canadian dollar probably going to drop. If we get negative news for the CAD today, negative with the unemployment, which is what's forecast, and we've got these extra tariffs going on Canada, not going to be good for the Canadian dollar today, is it? Trump set to keep tariff exemption for USMCA goods. But yeah, so there's nothing else I could see this morning, particularly to do with Japan. Offers to lend government debt spot, but that came out about 6 o'clock this morning. So yeah, there's nothing I could see really that would cause this weakness in the yen today. So it just seems like the yen is just having a bad morning, basically. But we'll see. That should hopefully recover. So those are your ADRs today. US dollar CAD obviously is one. That was that news event from Trump. So all it was a whipsaw spike. Again, it's one of those things. It's a Trump thing. It's likely to undo itself, but it is bad news for the Canadian dollar. So, yeah, that potentially is a good buy at the moment. So if you look through all the CAD pairs, Euro CAD, not going to help me, is it? So the euro will probably rally against the CAD. This thing's just annoying at the moment. I can't do anything with these. A lot of the stuff that I'm in at the moment, I'm just in it. I can't get out because it's just not moving. I can't get out with I can't add to it. I can't get out with a profit. It's just totally sideways. So, yeah, not great. But all the other CAD pairs, if you have a look through them, Aussie dollar CAD, that's already pushing up on strong Aussie. Obviously, that's to do with the interest rates, the Australian dollar. CAD yen and CAD Swiss, obviously CAD yen's a bit of a tricky one. So is CAD Swiss because they're both safe havens. Pound CAD, so that's a week against a week. So unlikely to move anywhere. That's probably not your best trade today. New Zealand CAD is running with the Australian dollar. So that's not a bad buy. That's just pulled back as well. So if you look on the low time frame there, you may be getting a reverse alert. Yeah. So that's a good looking little buy there. New Zealand dollar CAD. Weakness in the Canadian dollar. New Zealand dollar is rallying alongside the Australian at the moment. And obviously US dollar CAD is going up. So those are your ADRs this morning. Morning, Mark. Morning, Sebastian. Let's have a quick look at the indices. So indices wise, DAX broken short. FTSE 10-minute range is an inside bar at the moment, so no break on that. Beautiful day yesterday. Huge win yesterday. The US indices obviously all completely took off. I did put a post up about it, but yeah, beautiful break. I had a downside failed break on the S&P and then straight to target and then out on a trailer on the second half of it. The Dow didn't stop basically, so the Dow basically just took that 5-minute ORB. I think it's actually the 15-minute ORB, straight parabolic. Look, that was, can't see it's behind my head, can you? So literally since the break, it just went parabolic. There was not one red candle, straight to target. And as soon as it hit target, it put a red candle in, one red candle, and then it flew again. So trailing stop took out up at the highs, basically. So that was a beautiful one yesterday. NASDAQ, very similar. Didn't quite get the movement on the NAS, though. NAS broke to the downside, straight to target at monthly low, or previous monthly high, I think that is. And then the trailer took out the second half of it as it just came back up inside range. So the NASDAQ yesterday didn't really do anything, didn't go anywhere. But as you can see, markets this morning tumbling. Tariffs are not good. Yeah. So basically the markets are going back into fear mode. So those all-time highs that we've been looking at and going, wow, those amazing. We've made all-time highs. You've had them. Yeah. If Trump's going to incorporate all these tariffs again, this market is going back down again. So buying stocks at the moment, probably not your best option. Saying that, though, gone along on the FTSE. But then again, it's nothing to do with us, is it, in the UK? So European markets can do what they like, but US markets, typically you will find that the European markets will get dragged along with the US markets. Obviously, there's a lot of confluence in sectors, but we'll see where we go. So that short break is on at the moment there. We've got a long break there. So we're hedged. So one of those is going to stop out this morning. So it's going to be a choppy old morning this morning, but we'll come back to that in a bit. FX wise on RSIs, there's a few opportunities here. Aussie dollar CAD on the 4-hour, very extended, again above that 80 level. So drop down low time frame, look for it's a really nice level coming up as well. Look for opportunities to short. This actually is a very tricky one to short today. Aussie didn't change their interest rates, which makes them bullish. Canadian have just had massive tariffs put on them, which makes them bearish. So obviously the stance on this technically is long, or fundamentally rather, is long. So if you get up to 125 ADR today, you've got a scalping opportunity at that monthly high. So that's a double top monthly high, very strong resistance. There's a lot of sellers sitting up at this level. They don't want to let price through that 90. It's kind of 90,500 level, that is. 90,420 odd. So pretty much round number. So that is a very, very strong upside resistance. So if you do get 125 ADR today on that, really nice little scalp opportunity if it can get there. It's very, very, very extended. But as you can see, you know, that's the sort of movement that you should be looking for. So this leg here, just look for a flag break off of it. Don't go mad. It's a scalp because the fundamentals are bullish on it. So that's coming up to a nice level. It may just go from where it is. You could take a reversal. This is the sort of trade you can kind of scale into as a sort of interim position trade. So you've had a reverse alert and a retest there, but obviously it's pushing back up again. So if this pushes up a little bit more, you're going to get a new reversal alert trigger. So when you get that reverse alert, you can take a short on it and just hold it until you get up to that monthly level, and then take a second. As soon as you see a sign of weakness there, you'll average in and then go for that scalp off of those two positions. but get out of both end of day. So you need to put a stop on it. But yeah, short-term play, it may just go from where it is at the moment. Obviously, it's still struggling to get through there. But that's extended on the 4 hour, so that's a really nice opportunity for shorts. Aussies are extended at the moment. So your Aussie yen is extended. That's coming up to the 80 level. Your Aussie New Zealand, which I'm in as well. I've just taken another short on that this morning up here. So just had that reversal alert going in. I saw this rejection this morning. I literally opened my chart on this and I saw the rejection going in here and here. So I took the short on that double top. We got another rejection and it dropped down. It looked like it was working out, but we just put a new high in. So the reversal is officially in now on that one. So that's a good looking short opportunity. It's coming down quite nicely at the moment. But yeah, very extended on the hourly, very extended on the 4 hour, and it's embedded as well. So extended and embedded means continuous strength off the back of that move as well from last week, which was bullish. We should easily be coming back down to here to retest these highs at some point, 50% retracement. So looking for that move back down on the Aussie New Zealand. Euro odd, also extended. So really nice big drop to the downside on that one. It has filled this propulsion gap. It's a nice weekly drop. Obviously, Australian dollar didn't change interest rates. That's why we're getting this massive rally, as you can see. So we were expecting with the Aussies to drop down to 3.6 from 3.85. They decided to keep their interest rates the same. So the market had already factored in at that drop on the Australian dollar. When it wasn't achieved, they need to refactor the portfolio. So you get multi-day runs into those. So yeah, Australian dollar still strong. There is a chance that that could remain strong for a few days. So you're coming into this area of accumulation here, which we sat around in for 4 weeks. Is a previous area. So we had this drop down from this. This was the Euro rally, basically, when Trump announced that he was going to cut defense spending for NATO and we had to look after ourselves in Ukraine. Massive bond purchase in Europe to raise capital. That all then sort of faded out again. We had that accumulation for a week. We tried a price discovery back down to where we previously traded, which failed, and this became the new norm. So we tested a price discovery to the upside, which has held some market structures broken long. Now we've just had the Australian dollar rallying because obviously they didn't change interest rates. So pullback continuation to here. You're going to find support here. So this one has got potential, I think, to do another couple of ADR potentially. It is very extended. So it could pull back. That's a nice little trade you could take, which will get you roughly an ADR. The better trade and the nicer thing to happen on this would be for this to continue to rally and then take that, because that's really extended. You'll be like down here. You know, when you get to that sort of level, the pullbacks are much larger, much stronger. The stronger that stretched that elastic band is, the bigger and faster it snaps back. So the stronger that move is and the more continuous it is, the bigger that pullback is going to be. That profit take will happen faster and harder because there'll be more sort of worry in the markets about missing the profit they've made on that move. So it all tends to happen a lot quicker. So really good opportunity on Euro odd for longs, although obviously that is against the fundamentals on the Australian dollar. Nicely extended though. Same with the pound odd, both the same pair. Do not trade both, trade one or the other. Pounds just had bad news today. So you've got strong Australian dollar, weak pound. This is probably not the best mean reversion at the moment. It will, but you know, this one has potential to drop at least to 125 ADR. If it gets to 125 ADR, that I would say today is probably a good bounce point, but don't expect it not to do that. Look for a pullback up into there potentially, but it could just flag, then break down again. So if it gets down into here, don't get too greedy on it. Basically, fundamentals are against you. The pound's going into recession. The Australian dollar is bullish because it hasn't changed interest rates. So the bias on this is definitely a short. So obviously you could look for pullbacks to short it, but I don't think you're going to get them. But we'll see. So pound odd, nice extension there. So all we're doing with the RSI dashboard is we're looking for opportunities, something that has moved. We're looking to get in on the profit take off the back of it. Euro New Zealand is your only other 4 hour. And again, this is to do with the Australian dollar. New Zealand dollar interest rates didn't change. This will be moving on strength in the commodity markets based on the Australian movement. So the New Zealand will benefit from that as well. Shouldn't be particularly strong. Has been extended. Popping back up again now. Yeah, it's already sort of started that pullback. You've had a reversal alert short on that. The reversal alert this morning long was down here. You had another one there as well. So that was your first reversal alert today. We came back down. That's your second entry. So yeah, looks good for longs, but you kind of missed it. So that one's already played out. Hourly extensions, same as the fours. Yeah. So often whenever you get a decent 4, you're going to have an hourly because it's got to have gone for hours to get to a 4-hour extension. So obviously those ones are the ones I tend to focus on because these have already happened. There we go. So that's all of your current pairs. We don't seem to be going anywhere this morning. So just pulling back inside the open on the DAX, and the FTSE is pulling back inside the open as well. So not a lot of momentum. I think the markets are kind of probably waiting a little bit this morning because we had a very big explosive move yesterday. So we may be waiting for that unemployment rate on the CAD. We'll see. French CPI has just come out positive, ever so slightly upticking, which is in line with the forecast. So we were expecting CPI to stagnate, which is why Lagarde has kept the European interest rates static. So nothing unexpected really there. There we go. So there's not much else news today. So a few good opportunities there. I should be watching this pound. It's pulling back again. So not massively strong move on that pound, although that might be to do with the US dollar. Let's have a look at the rest of the pound pairs. Pound odd still weak. Pound CAD little weak. Pound Swiss weak. Pound yen. Yeah. So that looks like a little bit of US dollar weakness creeping in there. That's making that pound US dollar rally back up again. Yeah. US dollar's coming down this morning. Again, if Trump does all these tariffs, dollar probably down as well. This is the problem with Trump. There's no on-off switch and there's no preempting. It just comes out. So you don't have time to react to these events, unfortunately. It's typical Trump. So the market will tend to have an explosive move off the back of what he says. And then we covered this in the member stream. We did a member stream on this. It's exactly the same pattern as last time he was in. Explosive move, complete reversal, or at least 50 to 70% of it reverse, because the market just panics as soon as he says something because he's irrational. Panics. And then it goes, actually, no, it's okay. And then it will absorb the information and then it will go. So the initial knee-jerk reaction is a mean reversion opportunity. The problem with trying to trade these moves is picking. You've got to be able to pick the high or the low of the move. And it's very difficult because you don't know how panicked the market will be. So reversal alerts or anything really, moving average crosses, will give you the signal when that does start. But there could be multiple false signals on the way. So it's tricky. They're very, very tricky to trade, these Trump moves. But as you can see, market seems to be not liking what they've heard this morning in London. So weakness, a lot more weakness in the dollar than there is in the pound, considering the pound's just potentially going into recession. So interesting day. We'll have a look at it later on. So I'm back on at 2:30 this afternoon. We'll have a look at it again then. Ismet, good morning. Herc, is ADR calculated differently depending on the broker you use? Nope, ADR is always calculated the same. All indicators are calculated based on data. So if your broker has different data to another broker, then yes, the calculations will be the same, but the data will be different, won't it? So most of the, I mean, if you compare brokers, so if we look at the DAX here as a good example. So this is Robo Forex. Okay, so you can see Robo Forex. My chart opens at 9 a.m., which is 7 a.m. UK time. So the first 5-minute candle is 9 a.m. broker time, 7 a.m. UK. Global Prime, the first candle is 3:15 a.m., which is 1:15 a.m. UK time. Yeah. So obviously the ADR reading here is 30352. The ADR reading here is 277.5. Totally different. But the main reason that is different and so far out is because the candles are different. So ADR is calculated on the average daily range from high to low. If your broker ignores a massive chunk of price action, you're going to get a different reading, aren't you? But the thing is, that is still consistent. The average daily range is the amount of movement measured on the chart on the candlesticks. So it has moved 277 per day. You're just missing a big chunk of that data. So this DAX is a really good way to demonstrate how different they can be. But if you look at something else, if you look at an FX pair or something, you'll find there's very little difference in FX pairs. So with the FX side of things, obviously, we're coming back down, going to stop out on that FTSE by the look of things. With FX, it's 24/7 pretty much, isn't it? It's 24/5. So the market really has no gapping. The difference you get with brokers is the overnight candle. Let me just open up another terminal. This one. So if we look at the, I don't even know if I've got. Okay, so ADR 10. So this is just one of my MT5 demos, basically. Pound yen. So the pound yen ADR on Robo Forex is 143. On Shift Markets, which is who this broker is, the ADR is also 143. Yeah, this is a different terminal. This is MT5 versus MT4 with different brokers on the same symbol, but the price action basically is the same. Yeah, so if you go down and look at the price action, an absolute mess on this chart because I've been doing other things on it. There we go. So we can actually see stuff. You can see that the price action is pretty much the same. Yeah, so push down, pull back, push down. Yeah, and the ADRs are also the same. IC markets is also 143. Yeah, so Sebastian's just said. You're only really going to see a difference on indices or anything that gaps. Stocks will be different. Indices will be different. But most, you just have to always trade your own charts, trade your own data. If you're testing a strategy on Robo Forex and you're going to trade on Robo Forex, make sure that all your back testing is on data from Robo Forex or from a broker that has the same open as Robo Forex, right? So if you're trading on Global Prime that has a different open, then find data that matches that open. There's plenty of data sources out there. Dukascopy, DarwinX provide data. There's tons of brokers that you can get back testing data from. You just need to make sure it matches as close as possible to the data that your broker has, because then your back testing will match this. But yeah, ADR in FX, it's virtually the same everywhere. You will have discrepancies. You know, you'll have some people that'll be on 141, some people that might be on 145, but it's a couple of pips. But indices, yeah, very different. You know, so this is why I kind of prefer the global prime, because they match more the data that the markets tend to use. It's difficult because every index is also different. Stopped out on the FTSE. You know, US indices, again, are very different, because the US indices, if you look at the last candle on the US indices, it's 23.55. If you look at the first candle, it's 1 o'clock in the morning. Yeah, so there's an hour gap, which is right. The Globex session on US indices is pretty much 24 hours a day. You've got an hour gap in the middle where you have the rollover, basically. So that's fine. But the European markets work very differently. In European markets, we don't have an overnight session. We don't have an electronic trading or a Globex session that they do in the US. So the markets are shut. So you do get gaps. Yeah, but some brokers will fill that gap with data based on overnight speculative trading. So they make chart data, and they will do the same thing. They will do it in the same way. So anything you see on your broker that is before 7 a.m. UK time isn't real trading. So if you take that into account, you're reliant on your broker making up the right thing. So, you know, it's backtesting is a very tricky thing. But, you know, and this is where ADR is basically a measurement of volatility. So I'm interested in, when the markets are open, how volatile are they? Yeah. That is a gap down. Yeah. So when the US session opens, anybody that's using chart data that is not including the Globex session. So you'll see on a lot of futures traders, they use data that starts at 9:30 a.m. and goes through to 5 p.m. US, or 4:30 p.m. US usually. Yep, so they are only interested in the movement during the New York session, from when that bell rings to when that bell rings to shut the market. That's all they use. And they calculate their VWAPs on it. They calculate their average daily ranges on it. They calculate everything on that. Others use the Globex session, because Trump this morning mentioned something that crashed the market. During Globex, the electronic trading kicked in and the algorithms sold off, quite rightly. So this is not fake. This is actual price action. But the guys that this afternoon, when let's say we do this all day, at 9:30, what they will see is that's your close. In fact, that was probably the close there. And they will see a massive gap down. So they will be thinking, I'm going to play the gap play. Whereas I will be thinking, I'm going to play that propulsion gap. Yeah. Trade your charts, trade what you see, because you will be trading different strategies based on the data that you see and what you see painted on your chart. Candlestick trading is a visual thing. This is a representation of price over time that is generated by a computer that draws something on a chart. It's not real. The market has no idea about candlesticks. The market doesn't use candlesticks. It doesn't use tick charts. It doesn't use anything. The market uses price. It moves from price A to price B. How it gets there and the speed of it, it doesn't care about. We care about it because we like to plot it on a chart so we can see how it got there. But you suddenly switch this to a 15-minute chart and you get a completely different representation of price over time, which completely skews everything you thought about on the 5-minute chart. It's all irrelevant. At the end of the day, what you have is the ability to wrap risk around price and trade it. You have no way of forecasting how it gets there. You have no way of forecasting when it will get there or if it will get there. You can wrap risk around it, and that's all you can do. So when there is an open, I wrap risk around the open and wait for price to break in a direction. If it breaks, I make money. If it doesn't break, I don't. but I have no way of forecasting which way it's going, and what it's done in the past isn't going to help me. I can see if it gaps down that sometimes it fills the gap. Sometimes it doesn't fill the gap because the gap is formed because the market's sold off. So it doesn't want to go back there. It wants to go down. It's a 50-50 shot. All you can do is wrap risk around price. Whether you use a line chart or a candlestick chart or whatever chart you want is irrelevant. Doesn't help you in any way, shape or form because this thing pushing up now is pushing up. You can either go that or that. And if you're going to do that, wrap some risk around it and wrap a target. If you want to do that, wrap some risk around it and around a target. Whether you're looking at a line chart, a bar chart, or a candlestick chart, doesn't help you in any way, shape or form, does it? Whether the ADR on your chart is 143 or 123, doesn't matter. That is a tool to show you how much it moves based on the chart that you're looking at, and you can apply risk based on that movement. Other than that, it doesn't help. Hopefully that answers your question. It's very woolly, but I can't give you an exact answer because there isn't one, because the markets are fluid, reactionary, and data is different everywhere. It's like a weather forecast. Open up the BBC weather app, right? And I go, oh, it's going to be nice today. My son walks in and goes, nah, it's going to rain later. And I'm like, what do you mean? Look, BBC weather says it's sunny. The Met Office says there's a cloud formation coming in and it's going to hit us at 1:16 this afternoon. Who do you trust? At 1:16 this afternoon, it will either be sunny or it will be raining. One of those data sets will be correct. Until it gets here, you don't know. Exactly the same as this. Data is data. It's historical and predictory. That's it. You can't rely on any of it. So all you have is risk. You basically take a position and you hope and wait. That's all you can do. IC markets, I think commodities futures varies the most for most of MT because of MTM. I don't know what MTM is. Month to month. I don't do commodities futures, so I wouldn't know. Morning, Moonmo. How are we doing? Right. Let's have a quick look at where we're going this morning. Nowhere. So market's dead today. So ORB failed on FTSE to the upside. It looks like we're going to attempt a short break. So we will see. We're just about to trigger on that. One more. That would be nice if we, yeah, there we go. So short FTSE, we are pulling back out on the DAX as well. So hopefully market's going to sell off. They should really sell off because of this, what Trump said this morning. I mean, there should be fear coming into the market. So I think the commodities futures varies the most because of market to market. Don't trade them. If you say so. You know more about that than I do. The reason I don't trade futures is because they're too restrictive. I like to be able to put my own risk on, not one contract every time, which I'm forced to do on prop, unfortunately. But anyway, right. So that's your lower day. If you are taking into account pre-market data by the broker. If you're not taking into account pre-market data by the broker, none of this exists because the market didn't open until there, and it's roughly where the price was before. So if you are using data supplied by your broker that didn't happen because the markets were shut, you're looking at this as a support. If you're not looking at that as a support, that's your support. You know what I mean? Whether it's going to use that support or not, I don't know. The reason probably they picked that as a support is because that is where the buy order went in. So that's propulsion. Yeah, it's all discretionary, isn't it, at the end of the day? So, yeah, so basically, let's hope we get that break to the downside. I was just looking at where we're going. So to me, that downside partial is absolutely fine. If we do break to the downside, we're going to get stuck in this accumulation. This is where the buyers are. So there's a good probability we will find some support there. If we can break that support, that is easily target today. In fact, all the way down there, potentially. Why is it on sell stop down there? Oh, that's probably because of my internet. I had an internet issue the other day, and I came up and I'd lost internet here. So I suspect my internet was out when the EA was trying to close the orders and it didn't close out the old pendings. Need to check that. Yeah, there you go. Look, there's a buy stop up there as well. Good job I noticed that. That's from when I lost my internet connection. So the EA couldn't shut my trades out. I just need to check those US indices as well. I haven't got any on those. That's fine. Those were all closed out, basically, so that's fine. Always worth checking every now and again. So yeah, so DAX to the downside. This is Wednesday's low. So you've got this accumulation break here. So this propulsion is potentially downside support. If that gets through that, we'll be coming down to test that low. So partial's not too bad in a position there. So I'm just going to leave those as they are. But we don't seem to be going anywhere today. So this looks to me like it's going to be a choppy old session. So it might take a couple of stop outs today, unfortunately. Market's stuffed, isn't it? It's not moving anywhere. Right, I'll be back this afternoon. We'll have a look at the US indices. We've got the unemployment rate coming out an hour before that. So potentially there is some movement in the Canadian dollar. Shouldn't affect the indices. So the open should be normal as it can be. But keep your eyes peeled on the news today. Trump is sending out letters to do with tariffs at some point today. No idea when. Stuff seems to be happening while he's asleep. So, he will wake up when the markets wake up and then he will start doing things. So be aware of that today. Keep your eyes peeled. US equity index futures fell and the dollar rose after Trump escalated trade tensions threatening more tariffs. So just be aware. Obviously, that is potentially happening today at some point, but we don't know when. Craig, I did an optimization overnight of 11,000 variations. What do I do with the data now? Analyze it. Look at it. I can't go into that in super detail. If you want to know what to do with it, go. If you're not a member, join. And go and look at the posts down here. So these posts on the member streams are about testing and optimization best practice, system parameter permutation testing. Yeah. So these kind of 5 videos right at the beginning are all strategy development, and they're all to do with system parameter permutation testing, how to analyze using bell curves and all that sort of stuff. So, yeah, it's not something I can go, what do we do with the data now? Oh, this. It's quite a lot of depth and detail. So basically you analyze it, find out what works, find out what doesn't, look for patterns, and look for something that is confluent across multiple tests. So if all of the ones that are making the most profit are using half an ADR to scale into positions or half an ADR as a range, and all the ones that are losing are using 1 ADR to scale in or 1 ADR as a range or something, you know that 1 ADR is not what you use half. Thought there was a software to plug it into. You can plug it into Quant Analyzer if you want. But not for system parameter permutation testing. No, there's no software for that. That's you, spreadsheet, Excel. It's all covered in there, basically. These member streams, the early ones especially, are pretty much everything you need to know about everything to do with trading, testing, strategy development, the whole lot. Yeah, there's a lot of content in here. But, if you spent like 3 weeks of your life just going through this content, there's nothing you won't you will know everything there is to know about strategy development. Very straightforward. Like, this is what it is. This is what it works. It's all to do in maths, basically, at the end of the day. Trading is mathematics. Yeah, statistical analysis, edge, mathematics. There's nothing else to it. There's no skill in reading technicals. Yeah, sellers are market. Sellers are adding, or they're not. That's it. It's 50-50. The market is binary. It's black, white, 1, 0. That's it. It goes up, goes down. That's it. That's all you got. All you can do is wrap risk around it. So when you're doing any back testing, that back testing will show you what the best things to do, what the worst things to do are. You focus on the best things to do. And you see if there is a mathematical edge in the strategy that you are analyzing. If there is, great. If there isn't, dump it. There's very few strategies you will find that work. I have 3. That's it. There's nothing else that works that I've found. There's variations on it. There's 100,000 variations on the same thing. You've got trend, mean reversion, and breakout. Those are the 3 strategies that exist. Every single strategy on the planet that anyone will ever teach you, any PDF you will get, or anything you get out of artificial intelligence will come down to trend, mean reversion, or breakout. The market is either trending, mean reverting, or breaking out. It cannot do anything else. When you do a system parameter permutation test on a breakout strategy, you just need to find out what the optimal ranges to use are, where the optimal stop placements are, and where on average it goes to. That creates your edge. There's nothing more complex. If you try and put filters and stuff inside, it's just going to make it more complex and fail. If you ever want to know about exactly how the markets work and how mathematical edges work, go and read as much as you can about the turtle traders from the 1980s. They cracked it, and that's it. Their strategy has nothing to do with anything you see on the chart. Their strategy is a mathematical equation, and maths never changes. The market changes every single day. Maths does not change. That's all you have, mathematics, because that's all this is statistics and maths. You just need to formulate a strategy, which is a mathematical equation for price over time. Turtle traders, there's people trading the turtle strategies now from 1980s, and they are still killing it. Yeah, but they went through a phase for 4 years, yeah, where they didn't make any money. Why didn't they make any money? Because the turtle strategy is a trend strategy where you add. For 4 years, the market went sideways. They hemorrhaged cash for 4 years. When the market didn't go sideways, they made an absolute fortune, 400 million each, roughly. But here, they lost millions. But there's nothing wrong with their strategy. The mathematical equation on extracting money from market movement is exactly the same today as it was back then. If today the markets do this, that strategy doesn't work. If the markets do that, the strategy works. So you pick one. Do you want to do the turtle strategy? Do you want to do my type of trading? Or do you want to do that type of trading? That starts with that. So if you become a breakout trader and turn into a turtle, tick, tick. Trouble with that is 80% of breakouts fail, which is why I'm a mean reversion trader. There's 3 strategies. That's it. You find me something else the market does. Go and show me any chart. Yeah. Take a screenshot. It will either be trending, mean reverting, or breaking out. This one's doing all of them to a very bad way, in a very, very bad way, isn't it? But that is all there is. It cannot do anything else. It's either doing that, or it's doing that, or it's starting to do that. That's all it does. It's a very simple thing. It's binary. Do you go back to 0.15 range on the DAX? My 2-bar range is 0.2. Yes, I have. Literally yesterday. Oh. Yeah, I changed back to 0.15 yesterday. I don't know. It's not right or wrong. It's it is. I'm. The edge is there on both, basically. So when all my system parameter permutation testing, 0.15 works, 0.17 works, 0.2 works, 0.25 works. They all work. If I sit here and I find I'm not taking many 5-minute ORBs, I might move the range down. Whether it's the right or wrong thing to do, the market will tell me later on in the day. So yeah, I'm 0.15 at the moment. But if you were 0.2, well done. I think you probably saved yourself some money this morning, didn't you? Because you probably would have got on the FTSE. You would be on the DAX. Well, you're not on the DAX yet. If you're trading 0.2, that will be your 15-minute ORB. So you won't actually be in a trade yet. So, but if this breaks down, you'll be in it with me. I'll just be in it a little bit earlier. That's the only difference, isn't it? You know, this is the thing. This is what I'm saying about system parameter permutation testing. This strategy, this breakout strategy, uses a range. Which range is the right one to use? I have no idea, because I don't know what the market's going to do today. What I do know is if you use a percentage risk based around that range, and when it breaks, the edge is that the target is higher than that, there is a statistical mathematical edge that produces an expectancy which is above 1. That is a strategy. That is an edge. That's all I have. I don't know which range to choose every day. I do know from my system parameter permutation testing that a 0.1 or a 10% of ADR range is not as effective as a 15% or a 20%. So therefore I use 15 or 20, not 10. But 10 also produces alpha. 10 is profitable. It's just not as profitable in my back testing and robustness testing as these two are. So I choose those. But someone else trading 10 today will be in exactly the same trade as me, short now, because that would have been 10% of the range. My system parameter permutation testing told me that using a 40% maximum gives the same results as a 30% maximum, a 50% maximum, or anything above that. So I decided to use that. This one gave me slightly different figures, but not much different. Everything up here gave me exactly the same as that, which tells me that 40% max range is the optimum to use. So that's what I use. I never change that. So what I'm saying is, if it goes parabolic at the open and the first 5-minute candle is half an ADR, I'm not interested because it's already done its move. So that upside is literally a stop filter. It's like, whoa, hang on a minute, this isn't normal. That's all that does. But the 10 or the 15 or the 20% range, every day you're going to get a different result. Some people will get in and go, haha, I took a beautiful trade because I used the 15, and I'll be sitting there on a 20 going, I didn't get on that. Yeah. Other days, I'll get onto something that other people won't do, and I'll be going, haha, that was brilliant. And they'll be going, I didn't get on that. But what is important is that risk parameter. This risk that I just stopped out on there, the reward on the short is higher than the risk. Yeah. So when this break short goes down to there and it closes out a partial, that recovers all of that loss plus around about 10 to 15%. Yeah. So that's the edge. Mathematics, statistics. That's all it is. I have no idea which way this is going. Most of the people out there trading will go, right, the bias today is short because of XYZ. We've had 3 down days, which means that we're due an update. Rubbish. The market will go where the market goes. Market doesn't give a monkeys about what happened yesterday. Trump announced something this morning. It's all different. Piece of news comes out. It's all different. NVIDIA says that they're going to stop manufacturing chips in China. All different. NVIDIA. NASDAQ will be totally different today. What it's done yesterday, what it's done for the last hour has got nothing to do with where it's going. What your job is to wrap risk around price and create a statistical edge. That's it. Have nothing else. Unless you have a crystal ball or a time machine, in which case I'm all ears. I would love it. I was in the members for the first month. Oh, well, you should know all this then, Craig. You need to get back in the members then, if you've forgotten it. Just watch back on chart data and have to say CFD charts are based on futures data. Yes, they are. Well, they're not based on futures data. They're based on the market. It's all the same. There's no difference between futures. A CFD is a contract for difference. That's what a CFD is. CFDs are your broker taking the price that they can get from the future. You can't trade anything else. You can only trade the futures market. Nothing else exists. You've got spot forex and futures. That's it. There is nothing else. Yeah. People frown on CFDs and go like, the futures traders go, trade CFDs. When I show them the exact same candlestick pattern that they're trading, yeah, they go, well, yeah, but it's different, isn't it? CFDs, it's not as good as futures. It's exactly the same as futures. 100%, 100% exactly the same. That price is different because my broker has a different quote on a CFD. That candlestick is exactly the same. Nothing different. I have a spread. You have a commission in futures. Yeah, I'm talking to a fictitious futures trader now. Yeah, it's not as good. Why is it not as good? Well, look at the size of that spread. We don't get that in futures. No, but you do pay a massive commission every time, don't you? I don't. Yeah, but so if you enter 15 contracts, how much do you pay? Well, if I enter 15 contracts, I don't pay any different. I pay the same spread every time. So I could enter 100 contracts now and pay exactly the same spread. You'll enter 100 contracts and your cost for exchange will be huge. Why are you trading futures? You have to trade one contract. What if you want to put less than that on? You can't. Oh, I can. So it's no different. It's personal preference, isn't it? But the price is the same. Market moves. Your broker is accessing a dark pool or a futures pool to execute your order. What you are entering into on a CFD broker is a contract for the difference in price entered at to the difference in price exited. Contract for the difference. That's a CFD. You are entering a contract to say, if I buy it here, you will pay me X. And he is saying, I will contractually oblige to pay you that. That is what a CFD is. When you sign a contract with a CFD broker, you are also saying to them, I authorize you to get me the best possible price available to you at the moment. So if I say I want to sell here and he decides to spread the market up to there, he wouldn't do that because it gets me a better price. But if he decides to spread the market down to there and enter my price there, I can't turn around and say to him, I wanted the price there, because he will turn around and point to the contract that I've signed, which says, I will offer you the best price available. He decided he wants to give me that one. That's the only difference between CFDs and futures. You are entering a contract with a broker and the broker has price manipulation. In the futures market, you enter a list of orders waiting for a price point to be executed. It's a different execution method. Other than that, nothing different. Same thing. Price is price. Movement is movement. You can trade anything that moves, yeah? Trade soybeans, trade whatever you want. If it moves from A to B and it's volatile, you can make money out of it. It's all the same stuff. Any turtle trading book recommendations? The original by I've forgotten his name completely. There we go. Michael Covell. No, it's not him. Richard Dennis. So basically the turtles were, it was Richard Dennis basically, and it was an experiment. Richard Dennis basically got a load of people together who had never traded before and some that had traded before. I think there was 6 of them, something. Men, women, young kids, old guys, got them all together in a room, and he spent 3 weeks basically teaching them his mathematical equation, right? And his goal was to basically prove that you could learn to trade and you weren't born with the skill. Yeah. So his goal was to say, I am going to teach you a mathematical equation. So his equation uses ATR, basically, and it's a N equation, which is a representation of distance. And what you do is you take a breakout of N bars. So his original equation was, you take a breakout of the last 20 candlesticks. Yeah. So if it breaks out above the last 20 candlesticks, you buy it. Yeah. And then you have a trailing stop out, which is the last 10 candlestick range. So if it moves down and it closes below the last 10 candlesticks, you exit the trade. Yeah, the mathematical equation is out all over the internet. It will be in this document here. And all it is basically you take that breakout and you add size to it at n distance, which is a multiple of ADR. And the mathematical equation is that you will lose somewhere in the region of 70 to 80% of your trades. But when a trade works out, because of the scaling in, the way that the scaling in works, the mathematical equation means that if only 20 to 30% of your trades in an entire year work out, you will double, quadruple your account. Yeah. But you have to sit patiently losing constantly. Why? Because 80% of the time, the market is in mean reversion and range. It's a trend strategy. Only works in a trend. And this is why the turtles lost so much money in the 90s, because the market went sideways for years. Their strategy hemorrhaged cash. One of the second generation turtles took it to crypto in the 90s and made 400 million in a year. Something ridiculous. I can't remember the numbers, but he started with 500K and he ended up with 400 million because the mathematics will never stop working. The mathematical equation they use, or that Richard Dennis came up with, works today. There are traders out there, there are turtles out there right now running hedge funds. The original turtles, 3 of them are still running 3 of the largest hedge funds on the planet. And they are using the same strategy that was developed in 1983. Yeah. But it's a long-term investment strategy. Yeah, you can't trade this on any other time frame than daily. It doesn't work. I've tried it, believe me. It's an investment strategy. It outperforms buy and hold on the S&P by hundreds of percent because the S&P trends a lot, or used to. Yeah, since COVID, turtles badly hurt. In 2021, the turtle traders made a fortune because the market was shocked and panicked. They lost a load of money and then it went into massive trend mode. Look at what happened on the S&P in 2021. Yeah, turtle traders, 200%, 400%, massive, whatever it was. You didn't stop trending. Yeah, but before, it was a bit dodgy. That period there, hemorrhaging cash. That period there, killing it. They will make 10 times in there what they lose in there. But can you sit there for a year and make no money? If not, that's not for you, that strategy. It's an investment strategy. Yeah. That will have made the turtle traders billions, millions, many, many, many millions. Yeah. Because it doesn't matter which way it goes. It's a breakout strategy. You break, you hold. As long as it doesn't pull back above a 10-day average, you stay. When it does pull back above a 10-day average, you exit. And then you wait for it to break back above a 20-day average to flip direction. It's a very simple strategy, but it's nothing clever. There's no indicators. There's no indicators. There's nothing more clever than a mathematical equation for risk based on average daily range and multiple additions, which the maths makes it profitable. It's an edge. But there's not many of them out there because there's only so many things you can do in the market to make money, isn't there? My position trading strategy is a reverse turtle strategy. I do the opposite. I am a mean reversion turtle trader, basically. I scale in as price moves against me rather than scale in as price goes my way, because 80% of the time the market is in mean reversion, which means that 80% of the time my trades are going to work out. They don't work out in a squeeze. What's a squeeze? A trend. That's when the turtle traders work. Yeah. Breakout, mean reversion, trend. That's all you got. You're either a turtle trader, you're a mean reversion trader, or you're a breakout trader. My breakout strategy works on 5-minute time frame. I can't find a breakout strategy that works on higher time frames. I've tried. I can't find one. So I don't do it. I can find a mean reversion strategy that works on any time frame. I can find a trend strategy that works on high time frames, which is why I don't do it, because I can't stand daily charts. I have not got enough patience. I want to be paid today. Don't want to wait. I could be paid millions if I waited, but I can't. I don't want to. But yeah, go and read the original. Go and find any book by, and go and look at the videos. There's videos all over the place. The turtle strategy is very, very, very well known. Very, very, very well known. Here's all the rules. Yeah. This is the important thing, right? Did it work? Yes, it did. But does it work today? Yes, if the conditions are right. Back in 1983, we did not have anywhere near the level of algorithmic trading that we have today. Banks and institutions execute more than 90% of their trades using computers. When the turtles were trading, they were downloading charts, doing mathematical equations and charting on paper. Yeah, they're indicators. They used to spend 2 hours in the morning drawing indicators on charts to see if there was a signal today. And if there was, they would take a trade. They would miss the trade by hours because it took them hours to do the charting. Now, I've got an EA that trades the turtle strategy. But I find it unprofitable because the markets now are different. Certain markets still work. You need one of the key things in here, which probably it talks about in the book, but it doesn't talk about in here, is the diversification. You need to be trading a commodity. You need to be trading a stock index. You need to be trading multiple individual stocks. You also need to be trading the most liquid FX pairs that trend. Used to be the yen. It's not anymore. So, again, it's changed. This year, turtle traders on the yen. Look at the yen. Yeah. If you're a turtle trader on the yen, dead. Killing it. Killing it properly. Killing it properly. Killing it. What are we doing now? Not going to kill it anymore because the interest rates have changed. So if you're a turtle, probably I would say from somewhere around about 2020 onwards, making millions. Before that, hemorrhaging. But because that's hemorrhaging cash, doesn't mean that oil wasn't, soya wasn't, copper wasn't, gold wasn't, silver was one of the original turtle instruments. Went through a massive spike, silver, and then it died. So they made a fortune and then they lost a load. But what they lost because of the mathematical equation was a lot smaller than what they won. Pure risk reward. Look, don't spend too much time on it. You will get sucked into it. And unless you are looking to trade daily charts and you're not going to take a trade more than once a month, fine. That's all you're going to get. And you're going to need some serious capital to make this work. There we go. So he initial stake of less than 5,000, he turned it into more than 100 million. But there's go and watch some YouTube videos on it. There's loads of them. Yeah. Half of them are done by AI and they're absolute rubbish. But hello. Sorry. It's when I hit myself, my mic went off. So yeah, as I was saying, did I hit my mic again? Yeah. Basically, half the turtle traders didn't make money. Half of them did. So the other book you want to read is Trading in the Zone by Mark Douglas. That teaches you about the psychology of trading and the fact that you have absolutely no way of predicting what this is going to do. So the sooner you accept the fact that if you press the buy or the sell button on this, you have no advantage statistically. That little box that's just been drawn up there at that double top means nothing. As soon as you accept that and you stop thinking that is what's going to make you money, that's when you start making money. As soon as you understand that the market, whatever you're trading, whatever you look at, whatever your futures, your CFDs, whether you're trading gold, metals, commodities, FX, crypto, it all revolves around random price movement with risk wrapped around it and a mathematical equation that extracts alpha which is positive return. Expectancy. If you do a back test and the expectancy is above 1, you have an edge. If not, you don't. And coming back to what kind of triggered this waffle, was Craig talking about doing back testing. In your back tests of those 11,000 system parameter permutation tests, you will have an R expectancy on those, yeah, which will be a positive or a negative, yeah. Do not get rid of the negatives. Analyze the ones that don't make money and find out what is consistent in those. If every single one of these has an ADR above 2, right, that tells you it is not good to use that. So you focus on everything but that. If everything above has a setting of X, focus on the X. So all that system parameter permutation testing in the end of the day does is it tells you what is a good thing to do and what is a bad thing to do. Which of the good things, and this is where you will come a cropper basically, when you find your system parameter permutation test with 11,000 in there and you find out that 9,500 of them have a profit and the others don't, 1,500 of them don't, what you're left with is which of those 9,500 set files do I use? That is where the real work starts. Yeah. And this is why in here, I'm not bothered if I change this from 0.15 to 0.2 because they both work. If I change it to 0.17, that also works. I haven't tested it, but it's between 0.15 and 0.2 and everything in there works. So it doesn't matter what I put in there, does it? It works. What we're doing is we are wrapping risk around price. And I know that the risk reward ratio on this strategy works. Yeah. This morning we had a bad trade. I was 597 down. Now I'm sitting in 1,700 in profit. That's my net for the day. I could press the close button right now and walk away with that. Why? Because the edge is statistically there. Whether I use that candle, or that candle is irrelevant. The statistics and the mathematics in this strategy mean I can use any of them. One of them will work better than the others, more than the others. But they all work. Which one today, though? I don't know. And this is where your edge comes in. Yeah. Your experience tells you to do that because I see a whacking great wick forming and a bull candle forming there. So I know that the market is trying to pull back. So I'm going to take a partial there a little bit earlier than I should have done because the statistics said there, but also there, and down there also will make me a profit. But today I don't know which one. So I watch the price and I decide to make manual interventions on it. Whether I'm right or wrong is up to me, isn't it? Yeah. But I don't know what's the best thing to do. I don't know whether it's best to take a partial here or whether for the next 25 minutes we're going to do that. If I knew that, I'd do it, wouldn't I? I don't. But what I do know is I've got money now and I can take that. That's my decision. But they all work. Yeah. Whether you have this line there, or there, they all will make you profit because they are all greater than the distance of that statistical edge, mathematical edge. But that I think one of the reasons the Turtles book is, or the Turtles strategy is so popular is because it is a great way to learn how the market works. And the fact that this guy took a load of people from different backgrounds and different ages and different experiences and made them all millionaires proves that it's got nothing to do with skill. This has nothing to, it has to do with skill, but the Turtles that took the original strategy and made deviations from it, added filters to it, produced less profit than the Turtles that stuck with the original plan. Because as soon as you start adding discretion, like I just did, you get a different result. He tested that original strategy and he knows it works. My back tests show me that all the variations of my strategy work, most of them. So I can pick any of them. And the reason I can make changes like I've just changed there is because I know they all work. So it doesn't matter whether I move it there or I leave it there. It will work long term. I just don't know which one today. And I'm just using today as I fancy taking that. Why wouldn't you? The only reason I'm taking it is because of that. If that hadn't been there this morning, I'd probably let this run. So it doesn't matter. They all work, don't they? Back chat. In my testing on futures in the US, Dow is the worst performer no matter which setting I use. So I don't trade the Dow. Yeah. That's fine. If that is what you've found, don't do it. It's really pulling back, isn't it? Definitely want to take a partial on this. Just want to get some money in the bank, basically. Yeah, so don't trade the Dow. That's fine. If the Dow makes a loss, then yeah, get rid of it. One of the things on this website, this Edge Stat website that is basically being developed, is a key metrics analysis section, and it's got an AI built into it that will analyze your strategy for you. Has it got one? Yeah. Let's quickly show you this. Got to be careful what I show because I will get told off. So basically, we get this AI analysis of an account, and what this does is it analyzes your symbols. It analyzes everything basically, but the AI looks at the entire portfolio. It looks at every single symbol within your portfolio, and it shows you, and it reads basically back to you where your problems are, how you can make more money basically. So what it does is you just basically link your MT4 or MT5 terminal directly into the website. The website then gathers all the information. You press a button to do an AI statistical analysis, and it goes, right, you're an idiot, because what you're doing is you are trading the FTSE, and it's got a win rate of 32%. On the NASDAQ, you got a win rate of 56%. That's made you 11 grand, and that's made you a 9.5 grand loss. Why are you trading the FTSE? So you can basically read that and go, I never knew that. Yeah. If you've done the same on the Dow, but you've done it in the back testing stage, and you've gone, the Dow doesn't work, so you don't trade the Dow. What I would say is trade the Dow with a small risk, stick it in here, and see if the Dow does make a loss, because it might be something wrong with your back test. But it's entirely up to you, isn't it? So it's great. It analyzes everything in kind of intricate detail. But it's all to do with strike rates, profitability, time of day, symbol analysis, all that sort of stuff. You know, it just gives you a really good sort of look into your trading. And this is what I think AI is going to be really useful for, not doing the trading for you, analyzing your performance. It's one of the main things I think is where you're going to benefit. There we go. So out of that one, still running short on that. You know, it's just, this is what backtesting is all about, is trying to find statistical edges, then executing those statistical edges and analyzing your trades to make sure that the data that you're getting live is matching the data that you got in your backtests. Because if it isn't, there's something wrong, either with your backtest or with the strategy execution, or the market's just changed. You're now in a different market, and that breakout strategy is not going to work because it's been reverting or whatever. So that's where I think the edge is with AI at the moment, is doing all the analysis for you. It'll be very good. Being long the US indices is an edge in itself. Over time, always goes higher. Yeah. But this is the thing, like the turtles, right? So you execute the turtle strategies on the S&P 500, and you execute the standard buy and hold on the S&P 500. The buy and hold strategy, which is what Warren Buffett made all his wealth out of virtually, is 8% a year. So if you have 800 million and you stick it in there, do the maths. Yeah. If you've got $80, stick it in there, do the maths. Yeah. It's not worth it to make $8 a year, is it? When you've got a big chunk of cash, if you buy in January and sell in December on the S&P 500, over the lifetime of the stock index, you'll make on average 8% a year. You cannot fail to become a billionaire. Turtles could produce 400% return, 200% return. Worst case scenario, I think, was 35% return on the S&P 500 by using a mathematical breakout and hold trend strategy, long only. So you'd still go long only, but you get in more than once. So instead of making 8% once, you make 8% however many trades you can get on a year. But you don't just make 8%, because if you compound add to it, on those ones that go parabolic, you're making 80% per trade. Yeah. So by employing the turtle strategy on the S&P 500 on a daily basis, you're probably only going to take 10, 15, 20 trades a year, but you will be making 10, 20, 30, 50, 100% more than the standard buy and hold. And I'm pretty sure Warren Buffett didn't just do buy and hold. I'm pretty sure, he was around at the same time. He's not stupid. You will be looking at the people making money. 3 of these turtles now run 3 of the largest money under management firms in the world. Yeah, because all they do is execute money management. They're not clever. They don't analyze anything. There is no technical analysis. There is no fundamental analysis. There is no back scratching with politicians. There is no, I know the managing director or the CEO of X company. I've heard through the grapevine. They basically wait for the market to react and they follow it. And they use a mathematical equation to extract capital called creating alpha. Simple, isn't it? And that's all we do, isn't it? That's all I'm doing here. I'm not doing anything clever. I don't know where this is going. I don't know why it would go anywhere. I have no idea who is making this do this today. But what I do know is statistically, if you wrap risk around the initial open of the markets and the market decides to go, you generate profit. Why it's done it, how it's done it, and who has done it, I couldn't give a monkey's. And this is what everybody tries to analyze. Hey, look, there's a bearish engulfing there. That's the exact signal you should have taken. I can show you 1,000 of those that don't work. But what I do know is if this thing goes parabolic, I want to be on it, and I'm waiting. And this is exactly what we got yesterday, wasn't it? This is why I put that post out yesterday. The days like that are the ones that make the money. The days like that are the ones that don't. So as long as we get more of those in a year than we do of those, which we do in a trending instrument, you can't not, because it has to do these days to make that happen. And it always does this, as you quite rightly pointed out. The edge will never not play out. If suddenly, for some reason, the stock markets do this for an entire year, the strategy will fail. Nothing I can do about it. You can change strategy, but by the time you've changed strategy, the market will be back to what it did before, but you're not trading that anymore. Why you have to adapt. It's not just personal preference. There is regulation in certain countries. Yeah, so for futures, so with futures and CFDs, obviously, in the US, you can't trade CFDs, can you? So I'm just going to break even that. In fact, I'm just going to break even that as well, just to make sure I don't have a lost day, just in case Mr. Trump announces something. I protect that $86. But yeah, so if you can only trade futures, you can only trade futures. But the price is the same, isn't it? So you're just more restricted. It's like when I trade the NASDAQ on futures on Top Step or wherever, I can take one contract, which basically means if I was to short here, for example, let's say this is the NASDAQ and I was to short here with one contract, my stop here at $500 is my only option. I could put a stop here at $1,000. Or I could put a stop here at $250. Yeah. But what if I want to go short with a stop loss there that is $300? I can't unless I trade micros. So I can drop down and trade micro contracts. But then I'm still only able to trade single micros. So I can't trade the exact lot size to get the exact risk that I want to do. It has to be rough. And it's more difficult to calculate. You can only do martingale. Yeah. So let's say, for example, I want to get into a trade as this works, and I want to increase my lots by 1.2% if I have a losing trade. I can't do that in futures. I can increase it by 100%. So I can get in with one contract. The next time I trade, I could get in with two contracts, which means that my initial risk is $1,000, not $500. That's awful. Don't want to do that. CFDs allow you to do that. I can trade whatever I want. You know, I'm trading 53.8 and 3.8. 15.2 was the original risk on it. Much more manageable. All you do is you pay a spread. It's better if you can do it. That's what I'm saying. It's not right. It's not wrong. Some places you can't. And, you know, in hedging as well, as WDS just said, you can't hedge on futures because it's first in, first out. I can hedge. I can use the stock index hedge strategy and trade that way. You're just more flexible, more open. But anyway, I was going to go, wasn't I? It's 9:30 and I haven't gone. So yeah, nice profitable break this morning. We're still going on the FTSE. Looks like we've got through this propulsion move. So this is your sticky point. Failed downside auction, upside push. So you're going to find buyers in here somewhere probably. But I'm looking for a retest of this level here. Which means that my partial will get me out. But markets I would expect to be heavy today based on what Trump did yesterday. So it looks like we are getting the same treatment today. So hold it basically as long as you can. Let the trades play out. Take your partials, but you know, keep the runners on and just trail them. Same as yesterday, really. But bear in mind that Trump could come around anytime and just say something and off you go. Right, I'll leave you there. I'll be back this afternoon at 2:30. We'll trade the US indices. We'll see what they've done today. We are quite heavily selling off, as you can see today. So might be a tricky session this afternoon because if the market's already done most of its selling by the time the opening bell comes, we might just get a rotation today. So we'll see. I'll have a look at it this afternoon. Bear in mind 1:30, we've got the Canadian as well, unemployment rate. So be aware you're going to get some movement on the CAD. Other than that, that's it. So I will be back this afternoon. Out of interest, have you back tested the MRA as a trigger on the 5 and 15 without ADR or RSI? No. No. But I mean, it's all the market reversal indicator is a reversal trigger. It's a reversal signal. So all it's doing is telling you when the market has broken back to the upside. So if you take every signal this generates, you will make a loss. Does not work in that way. It's a reversal signal. So this is the last sell order before the high. When we break that level, the sellers that tried to break down have taken control back of the market, which is what we call a break-in structure. Market structure. So market structure is now putting in a high, a low. We would expect a lower high, lower low. That's all this does. It signals the start of the next leg. So if you take every one in a range, you'll just get reversal alert after reversal alert after reversal alert. Yeah. In a weak trend, you will get hardly any. You just won't make enough movement to make money. But longer term, higher time frames, if you take every long, yes, but I would want to filter so I don't take every single little tiny pullback. I want to take decent pullbacks, which is where this comes in. So the S&P 500 strategy that I have for the Market Reversal Alerts EA uses the 4-hour RSI. And what it does is it basically buys that, and it buys that. But it only buys. And of course, it only works when we're not in a bear market. So the question is, are we in a bull market or are we in a bear market? At the moment, I have no idea where we are. Rajiv, did I miss oil this morning? I don't know. Did you miss your oil this morning? I haven't looked at oil this morning. It's not gone anywhere. It's not going anywhere at the moment. We're basically back to what we were before. So what we were doing before it all kicked off with Israel, was basically we were starting a breakout, and then obviously it went mad. So what we've done is we've reverted back to where we were. So assuming we are just going to continue to gradually rise on oil, yeah. OPEC announced yesterday or Wednesday, I can't remember when it was, that they were looking to reduce production, which obviously will rally the price eventually. Not doesn't always happen straight away, but we should get a push. But I'm not going to have to turn that around so I don't keep hitting that. But yeah, I don't. The trade is invalid. This trade that I took was a conflict trade. The conflict has stopped. So what I'm looking to try and do is get out now. Just get out with a break even on it. Thankfully, the swaps aren't too big on it. It's costing me swaps every day to hold, but I'm going to start taking partials on it and just start gradually getting out of it. It's not going to work unless this, if it kicks off. If suddenly Trump turns around and goes, "Sorry, Iran, you are in trouble. We don't like you anymore." Brilliant. Or if Israel suddenly starts pummeling Iran again, brilliant. But not brilliant, obviously, but that will spike it, and I'll just get out. The trade's dead. Strange that oil is cheaper than our petrol prices. Still high. Yes, it takes about 3 months to kick in. Obviously, the way that oil purchasing works is you have the refinement process and shipping process takes a long time. So from raw production, this is the raw production price. This is crude per barrel. It's not petrol. There's obviously all that refinement costs and everything to go into it. So it takes months for that to happen before it gets to your petrol pump. So when your petrol pumps are buying oil, they're buying it at the price it was 2 to 3 months ago. So you have this very long delay. So when oil price collapses like it did here, within 48 hours, within 48 hours, we went from $75 a barrel to $65 a barrel. $10 a barrel should come off the pump. It will at some point. But this is nothing you can do about that. This is why I drive an electric car. I couldn't care less. Along with our energy prices in the UK, yes. I've just moved into a new home and it's unbelievably energy efficient. Like one of my neighbours down the road is paying 13p a day for electric. 8 solar panels, solar batteries, air source heat pump, insulation like you wouldn't believe. I went up in my loft for the first time yesterday. And the insulation in my loft is literally that thick. Yeah. It's like an oven in here. In the winter, you just don't use anything. So it's so unbelievably good, the difference between I came from a 90-year-old house into a house which is less than a year old, and the difference in temperature is unbelievable. The guy came round yesterday and did with a thermal camera, those ones you look through, and he did an inspection on the house to show how thermally efficient it is with the windows shut. There's just no blue anywhere. It's amazing. So yeah, I don't care anymore about energy prices. Go through the roof if you want. I've got an electric car. Mind you, I do care about it because of that, but and a super efficient house. So there we go. If I was still living in my old house, I'd be crying. And I was, which is partly why I moved. But anyway, right. I'll leave you there. Anything you need, let me know. I'll be back this afternoon at 2:30. Yeah, we'll see how we go this afternoon. Have a good day, and I'll be in Discord if you need me.